Well, speaking of metals, we've discussed the trades and perhaps the technicals that one can keep in mind. What about the fundamentals? What's really going on over here? The Nifty Metal Index, that's up about 3.5% this week. But for the month of December, the rally has been stunning, 12% up in the month of December itself. Amit Dixit is now joining in to throw a light on this. Amit, thanks for joining in. Season's greetings to you, and I hope you're geared up for a great new year. So, what's at play over here? Because on one hand, we keep talking about the possibility of the slowdown/recession in the US. I mean, I don't know if China has really started to sort of stock up in a big way, but what are the big triggers that have led to this big December rally across the metal spectrum?
Yeah, hi, good morning. So, if you look at the rally, it has its legs again in China. There is the usual optimism around around China actually bruising up stimulus measures, and I think the entire street is geared for that. And this is not a new thing. I mean, it is a textbook of whatever happened last year. Last year, also in December, we saw that there was a lot of euphoria around metal stocks, particularly steel, because of expectations of China injecting stimulus. Now, the proof of pudding is in eating, I would say, and what we have seen so far, at least that in China, the stimulus measures, the intent is always there, but we have seen the efficacy of these measures not as potent as it used to be in the past. So basically, what I read from here, going by the spreads that are there in the third quarter of the year, which have compressed because of robust coking coal prices and the fact that in India, the imports have been relatively higher. In fact, it's quite surprising that India is now a net importer of steel. So clearly, fundamentals don't really support it all the way through. I mean, it's not a blanket call for all the stocks, so you have to be a little bit discerning over here. But I think it's more because of China euphoria. Number one, the rally in the non-ferrous names is mainly because of the possibility of US going for rate cuts later this year.
So it's more of a trading, perhaps, a rally than fundamentals. Let's just talk fundamentals then to understand. Let's start with ferrous. You're saying that spreads are actually compressing. What's the immediate forecast? I mean, January, February, both in terms of demand overall, and also just how the spread situation is likely to move. And is there any reason fundamentally to be buying steel stocks now?
No, so again, in steel, there are stocks that are based on infrastructure, like your SAIL, JSPL. These are the infrastructure-focused stocks, essentially, and these have done quite well. Now, if you look at what lies ahead in terms of demand, well, demand has been quite robust, to be honest. I mean, I have never seen that in 3 years in succession, FY 22, 23, and 24, we will see a double-digit growth in steel consumption in the country. And that has actually led to the absorption of the capacities that have come on board. And the fact that, imports are continuing unabated just because Chinese imports or exports have been quite high. So therefore, that is putting the plug on prices. Now, spreads is more guided by the fact that coking coal has been very, very robust and it has not really fallen materially. While because of influx of imports, we have found that steel prices have not risen proportionately, and that has led to the erosion in spread. As far as the demand is concerned, demand is perfect. I mean, there is absolutely no qualms about the demand.
By the way, on that point about rate cuts fueling the recent metal rally, there was a Bank of America Merrill Lynch report which Manisha had spoken about. They said that we've seen 300 rate cuts across the globe from 2021 to 2023. And now in 2024, the expectation is from the Bank of America report, there will be 152 rate cuts by central banks in 2024.
152?
152 versus 300, 152 rate cuts next year versus 300 rate hikes that we've seen from 2021 to 2023. But very quickly, Amit, copper, what's the outlook on copper, and do you look at Hindustan Copper?
No, so we don't look at Hindustan Copper specifically, but as far as copper is concerned, well, if there is a possibility of rate cut, copper is the most investable idea in the space. So normally people expect copper prices to go up. So that is one thing. Then the second thing, what might be happening in Hindustan Copper, though, that there are a lot of houses who are talking about setting up a smelting plant in India, copper smelting plant. And in India, Hindustan Copper is the only one that is mining out copper. So clearly there would be a time, possibly like Hindustan Zinc, when Hindustan Copper would also find its real potential. And I think because of the possible rise in the copper prices, this is what is driving Hindustan Copper. Although we don't cover it formally, so I can't comment on any estimates or something like that.
Okay, all right, Amit, we'll leave it on that note for this morning. Thanks very much for the perspective. And once again, wish you a happy new year.